All right, well, hello and welcome everyone to today's webinar on the financial plan, and thank you for joining us today. My name is Daniel O'Shea. I'm the Program Manager of Finance and Reporting at Local Government Victoria. I'd like to begin by acknowledging the traditional owners of the land on which we're meeting today and paying my respects to their elders past, present and emerging. Local Government Victoria and FinPro have worked in collaboration to develop today's event, and I'd like to acknowledge and thank FinPro for their efforts in supporting the implementation of the Local Government Act 2020. Hopefully many of you will have participated in the FinPro Professional Development Day, an AGM that was held on Friday the 26th of February. And so you will have had an introduction to the financial plan publications already. I'm joined today by Malcolm Lewis, the Manager of Financial Services at the Northern Grampians Shire Council, and also Martin Thompson, the Senior Partner of Audit and Assurance at Crowe Australasia. Malcolm was part of the FinPro working group focused on the implementation of the Local Government Act 2020 and led the working group responsible for developing the financial plan, better practice guide and template. And Martin will hopefully be well known to many of you for his technical accounting expertise and support for developing the model budget and model accounts over many years now. For some of you, he may even be your auditor. Today, Malcolm is going to talk us through the key aspects of the financial plan template and the associated better practice guide, and Martin will be on hand to assist with questions later in the session. I'd like to welcome them both along to today's session. First up, a bit of housekeeping, just to let everyone know that today's session will be recorded for the purposes of making it subsequently available to anyone else who'd like to watch it after today. If I can please ask everyone to keep your microphone on mute during the session, obviously unless you wish to ask a question. We've allocated 1.5 hours for today's session. It may not go that long. We'll see how we go, but we will definitely stick to our allocated 1.5 hour time slot. So the structure of the session is listed on the slide. I'll start by providing a bit of a summary of the legislative and regulatory requirements in relation to the financial plan first. Then Malcolm will talk us through the financial plan template and better practice guide. We'll remind you of a couple of other upcoming events and webinars that FinPro are running. And there will be the chance for questions. We'll certainly have a space at the end of the session for questions, but we'd also like to encourage people to pop any questions that you might have in the chat function within Zoom. That's worked reasonably well in the previous webinars. So feel free, if you do have questions along the way, to put them into the chat function, and we'll attempt to respond to them as we work through the material today. First up, we'd like to do something a little bit different. So before we move into formal presentation aspects, we thought we'd use some of the functionality that's available in Zoom to conduct some quick polls, just to get a sense of where councils are currently at in terms of longer term financial planning. So Gab is going to help us and post some questions for you all to respond to, and it'll just help give us all a sense of where we're at in terms of the maturity of the sector in terms of longer term financial planning. So over to you, Gab.
Thanks, Daniel. And thanks to everyone for coming today. We've got, sorry, I'm admitting people as we're doing this too, over 100 here, so that's great. We thought that it would be useful, as Daniel said, to just gauge where people are at within their own organisations as far as what they're currently doing. So we're just going to ask you 4 questions. They're just a ticker box to answer. We'll open each one for about 30 seconds, get the answers and then share them, just so that you can see where your organisation is compared to the others, and so we can gauge, and particularly Malcolm can gauge, how to pitch his presentation today. So the first question is around what you're currently doing. So I've just launched that first question, if you wouldn't mind just answering it. Getting lots of yeses at this juncture. And certainly we understand that some people might not be across what their council's currently doing. So that's, you know, if you're unsure, that's fine too, but it just gives us a good picture. So we've got nearly everyone has answered. So thank you very much for that. Let's open it for another two or 3 seconds. Okay, so if we end that one and I share the results, there you can see there that 84% are currently preparing 10-year financial projections. So that gives us a good picture of what's happening there. If I go to the next question, here's the next question. So this is just asking about a total financial plan with both your numbers and your commentary. So just where you're at with that. Yeah, so this is showing slightly different. So it looks like a lot of councils are preparing their numbers, but not necessarily doing the total financial plan, which is completely understandable, and that's what we'll be talking about today. Thank you. I will end that one and then I'll share those results. And so it shows us a good picture. And the next question is around whether you use external or internal software, whether you're using Excel or a combination, or you don't know. That's great, and we're certainly seeing a combination there. It looks like Excel, good accountants, a lot of people are using Excel. I think it's what we're all trained in it to start with. Thank you. I'll finish that one off and share those results. Okay, and just one final question, and this may be a question you don't know the answer to yet. It's just trying to gauge what people's plans at this stage are in relation to the model template, but maybe you haven't had a look at it enough yet to know whether you use it or not. Right. Okay, well, that's certainly probably what we're expecting, is that a lot of people at this stage are not sure. Okay, I'm going to end that one, and I will, sorry for my little muck up there, I'll hand back to Daniel. Thank you.
Thank you so much, Gab. Some really interesting insights out of that. And isn't the technology amazing to allow us to so quickly access that information and get everyone's responses to those questions in the one place so rapidly? Really incredible. All right, so Malcolm might talk a little further to some of those responses and sort of, you know, tailor what he talks to a bit later on in the presentation. So just a quick reminder to everyone, if you haven't had the chance to go and get a copy of the financial plan publications, so there is a template in Excel and a better practice guide in Word. This is the link that's up on the slide at the moment if you would like to go and access those publications. Potentially, as Malcolm talks through them later on, you can follow through in the documents themselves if you would like to do that. All right, I'm just going to quickly talk through the legislative and regulatory requirements as they apply to the financial plan. So Section 91 of the Local Government Act 2020 sets out the legislative requirements in relation to the financial plan. Councils are required to develop, adopt and keep in force a financial plan for at least the next 10 financial years in accordance with its deliberative engagement practices. The Act sets out specific requirements to be included in the financial plan, and these include statements describing the financial resources, so financial statements, to give effect to the council plan and other strategic plans.
Hello.
information on the decisions and assumptions underpinning the financial forecasts, statements describing any other resource requirements that the council considers appropriate to include.
ये जिस पे लिखा हुआ Rome 1 gold कलर का.
Sorry,
चलो सही.
is it
हाँ वो बंदा
Shiraz?
आया था ले गया था.
Can we just mute the microphone, please?
अब तो तुम बेहतर लेके आओ. तो कहाँ से आना तुमने? अब बेहतर लेके आओ ना. अब लेके.
Thank you. So statements describing any other resource requirements that the council considers appropriate to include, and finally any other matters prescribed by the regulations, which we'll cover next. For 2021, the timelines for adoption of the financial plan are by 31st of October, and the financial plan has effect from 1 July 2021. So effectively summarising and paraphrasing it, that they are the key requirements set out in the Act itself. We also have requirements in the regulations. So the Local Government Planning and Reporting Regulations 2020, they set out requirements for the financial plan in Part 2, Regulation 5 and 6. So the regulations require that the financial statements in the financial plan must follow the format of the model accounts and include a statement of capital work. This ensures consistency of financial statement presentation across both planning and reporting formats, so that the financial statements in the annual report and also in the budget and the financial plan all have a consistent look and feel. The regulations require the inclusion of a statement of human resources and a summary of both planned expenditure and full-time equivalent numbers in relation to those human resources. And both summaries must be categorised according to the organisational structure of the council and classified by permanent, full-time and part-time staff, and also by gender. So those are the requirements of the legislation and the regulations. That's effectively the framework within which we're working. And next up, Malcolm will talk us through the better practice guidance and template that we've produced. So I will hand over to Malcolm Lewis now to talk us through those items. Welcome and thank you, Malcolm.
Thanks everyone. Thanks, and so I'm going to share mine. I think that this will mean it's no longer sharing your screen. So just bear with me while we just do this change over, everyone, and share. Okay, so hopefully everyone can see the screen. So again, welcome to our financial plan webinar, and thanks for the survey results. So interesting. So in summary, it looks like, and we hope that essentially that everyone or every council is going to be informed in one of three categories. And we suspect most councils have got some set of 10-year numbers they have for obviously the purpose of filling out the budget. So then I'm well positioned to be able to complete a financial plan because we have the 10-year numbers. Lesser numbers, as we expected, would actually have either to call a strategy document, a Word document, you know, the actual commentary itself, but the way Gab referred to in the poll. And in terms of the use of the financial plan template, obviously that's a work in progress on how people are using that. I think the key thing to point about this financial plan, the template, is it's a starting point, it's a baseline rather than an end point. Again, this is the first time we've done this. We expect it to be very much an evolutionary process. It does, of course, pick up all the legislative requirement that Daniel referred to. That's pretty important. So if councils don't want to use that template in entirety, it puts all those checkpoints around the legislation. So just going to work through the actual presentation. So the first thing is really the whole objectives of the 10-year plan again, and this is included in the regulations and the legislation as well. What are we doing? Well, essentially it's looking at the dollars necessary to implement the council plan and other strategic plans, because the end game is funding the council plan by the community vision. In order to do that, because we have a 10-year view, we need to build in some assumptions and decisions, because obviously when we're looking at the future, what are those assumptions looking at, particularly around assumptions around service standards, service continuity, renewal of infrastructure. The legislation also talks about the other necessary resources requirements included or that are contained in the regulations. So we've tried to incorporate that again as a baseline to the financial plan. Key dates for adoption. Some councils are going to align this to adopt it by 1st of July, or it's effective from 1st of July, but adopted by, I guess, by the end of June with the budget. Other councils are looking potentially a later date, whereas we have a latest date for adoption is the 31st of October. But again, it's effective from 1st of July. Again, we mentioned the key things there is the whole idea of putting these numbers together is demonstrating the financial viability and sustainability. So it's really okay to say, if we have a lot of things in the actions in the council plan, and a lot of councils, of course, are in the process now of developing their next year financial plan, how that's going to be funded, which is demonstrated by the financial plan. So, which essentially means sufficient money, operating and capital, fund the council plan and achieve those satisfactory results and hit those targets in the performance measures. Now, as we mentioned, so the performance measures are very much the same measures that are in the budget. We'll align that, but obviously it's a 10-year view rather than a 4-year view. The deliverables, so key things we need to do. Council is cover off strategic financial planning drivers policies. What's the policy position? Because at the end of the day, the financial plan is a strategy document, looks at what's council's priorities, its policies. The legislation talks about assumptions of the financial plan. We've got a section in that. And then, of course, key thing being the 10-year income, cash flow balance sheet, statement of changes of equity, capital works. Central is the reason we've provided obviously a Word and an Excel is so we can populate from, if those councils have got an existing 10-year model, they can populate the Excel document and then drop that into the Word financial plan template. And of course, the whole idea of is the financial plan. It's meant to cover all aspects of services, operation, capital investment. A key one of this, as you'll see, because there's other documents around such as the asset plan and the rating revenue plan, some of the pre-existing, if you like, strategy documents are probably more holistic in the fact that they cover off things such as rating and revenue and asset plan. This financial plan doesn't particularly focus on those because there's other documents that lend themselves that are specifically designed for that, being the rating and revenue plan, which of course needs to be adopted by the end of June, and the asset plan. Deliverables are templates. So the two templates we're providing is a Word document, which covers off the legislation, the principles, the policies, the strategies, the assumptions, the financial plan statements, the planned human resources. So that's the 10-year view of human resources. Again, same format, look and feel as the budget, but the 10-year rather than 4-year view. The financial plan indicators, and we've included there a borrowing strategy and a reserve strategy. So the financial plan document has the legislation up front and the actual template is the attachment. So for language purposes, we've called that financial plan in line with the legislation because that is the document that is ultimately for adoption. And for, I guess, for point of differentiation, we've called the Excel version, which we're going to actually populate these, I guess, tables that are on the left and then copy them, paste them into the Word document of a financial plan on the left. We've called the Excel document the LTFP, obviously short for long-term financial plan, but it's just as a point of differentiation for that purpose. A couple of things I just want to point on that are actually in the commentary would be the practice guide, which is the first section, obviously, the financial plan and covers legislation. The roadmap to adoption, and had some discussions with councils to date. Some councils said are either looking at a 30 June adoption, which is adopt in line with the budget, or adoption at a later date by latest 31 of October. And this came up when we put the financial plan out onto survey for councils. We originally indicated, and we still have a preference that the recommendation that where possible, not mandatory, but where possible for financial plan numbers along with the budget numbers. That's more likely to be possible for councils that are planning to adopt their budget with the same time as a financial plan. Those councils that may wish to adopt the financial plan after the budget then may include some initiatives in their financial plan document that's not in the budget. So in that case, the documents may be a little different. Issues to consider, of course, is the timing for adoption of a community engagement policy. Now, if you know the community engagement policy, some councils have already adopted their community engagement policy as a precursor to then doing their council plan and then rolling that through to some deliberative engagement on the financial plan and on the budget. There's also, and I'll talk about that a little later in the presentation, a level of community engagement. Again, this is a council by council basis and their appetite for low level up to a high level of community engagement. Again, the timing for adoption of those integrated strategic plan documents. We know the documents that do need to be adopted by the end of June are the budget and the revenue and rating plan. But some of those other documents have got a slightly longer time frame, like the financial plan, is to the 31st of October. But there are councils, again, this is again a council by council preference. Second, that's in the better practice guide, is talk about engagement principles. One size does not fit all, so that means that each council determine their level of engagement from low to high spectrum. So low level is just informed, which essentially means that the councils are going to tell the community, well, this is what we're doing. For consultation, you'll see there that the consultation, we ask the community their feedback and then inform them how the input affects their decision. That looks a lot like the old 223 process, where we seek their view, the council considers those decisions and then provides the outcome of that. Then moving along the spectrum from low to high, we have involve, collaborate and empower. Again, this is very much a work in progress in terms of where each council's appetite to. We're not being, I guess, prescriptive about that, other than to say we needed a policy, we needed a community engagement framework. This is certainly in the financial plan, is not to be an end all. It's really just touching on the framework, but it's for context around councils that have adopted a community engagement policy will need to consider some form of deliberative engagement, community engagement as part of the precursor to adopting their financial plan. But that's effectively the spectrum, but again, council to council decision on that one. Again, policies and strategies, again, while there's a lot of and legislative compliance, as we expect, this document's financial plans are meant to be a strategy and a policy document. But policy, again, is about how council demonstrates it's financially sustainable. Now, in the template, we've provided some examples, and we need to stress these are examples only to get a flavour of what we're referring to. So, for example, things such as consistent underlying surplus results as a measure of financial sustainability, the Bago ratios, working capital, depends, and again, this is council by council's approach in terms of allocating sufficient funds to Renewal capital to replace aging infrastructure. Now, again, some councils might have a higher priority to, and it also might be based on capacity to be able to fully fund their infrastructure renewal to 100%. Some other councils may not have the capacity to do that, and they might have to rely on a lower level of renewal funding, say 80–90% of their renewal to fund their ageing infrastructure. So I'm referring to renewal versus the depreciation ratio. Also, again, examples only, borrowing applied to new capital projects. And a lot of councils will already have a borrowing policy consistent with that. It's really putting those policy statements front and centre in the strategic plan to the extent that that's relevant for your council. The second point is strategic action, for example. So if you're going to allow put sufficient working capital, the fund, the capital renewal, let's look at that one. If you're going to allocate sufficient funds to renewal capital 100%, then logically the strategic action on that one is really going to be about showing a measure of their investment in renewal to reduce the risk and maintenance of infrastructure. So the strategic action in that is to actually take the action to do that, to actually invest those dollars. So that's going to be the action, the priority of the council. You'll see there in the document on the policy statement, we've actually put some tables around that. So you can actually put a measure on, which effectively is, I guess, the measures. Those measures are included elsewhere, but it can be also included as a policy statement regarding ratio of capital renewal to depreciation, which demonstrates that strategic action. So the policy statement and the table then provides the evidence of that strategic action. So that's why those two policies and strategic action, policy being demonstrating the measure, demonstrating that this is how council's priority is and how it plays out in terms of a financial plan by demonstrating those dollars are being allocated in the table. Again, assumptions on financial plan statements. Again, this is also included in the legislation about explanation on the escalation factors for major income and expense functions. Again, there's been some commentary about CPI and of course growth factors to try and get some consistency about that. So we've made reference to that into the user guide. Again, you'll notice there that included the key items in the income and expenditure, the income on the left of the screen and expenditure on the right. Councils may have an individual appetite rather than those line items include specific drivers of some income and expense, for example, financial assistance grant funding, so the Grants Commission. What assumptions your council's going to make on that over the 10-year plan? Now it's part that's within, for example, operating grants, but it is a key component of operating grants. Again, on the right-hand side, as well as, for example, employee costs, which are often, as we know, driven by EB and, for example, band movements and even level of growth that's expected in the municipality. Things like utility costs, street lighting and fuel costs can have their own unique drivers, which might be different to, say, contract movements or standard movements, for example, of CPI against materials and materials and services. The key one on here is really to talk about in this one is borrowing strategy and reserve strategy. The reason we've included that, because we see those as a fairly important source of funding, particularly on the reserves. If the reserves are ideally cash backed or asset backed, they then become an important part of funding. So on the right-hand side, we've included, or as a table for current reserves, description and purpose, and then some reserve usage projections over the 10 years. Again, that's all commented, and we'll comment on that a little bit more in the detail section. For borrowing strategy, logically look at current debt position. The second one I'll go down to here, which is the future borrowings requirements. You'll notice in this table, and I've highlighted this table under targets. This is a performance indicators. You'll notice that the target on those performance indicators for borrowing references 60% in a couple of instances. Again, this is not prescriptive. This is to be put to the individual council discretion. For example, the VARGO ratios, when I call the green zone, that is within the green zone of the VARGO perspective is low risk, is below 40% for a couple of these ratios. It's discussion of how financial plan working group, we landed on 60% as a target, but again, we need to highlight this is only as an example. If some councils don't have an appetite to go that high, then it's just a matter of altering that target for your own individual purposes. Future borrowing requirements, of course, is look at those 10-year projections for loans and interest-free payments, and then, of course, putting together the performance indicators, as mentioned here, which is around the debt. That's about all the questions that I had on that part of the presentation. Sorry, Daniel, I slipped that one in. Daniel hadn't seen that one before, but that was an example of the question, so I hope that's okay. It's in there.
That's fabulous.
Thanks, Daniel.
No worries. Thank you so much, Malcolm, for the presentation. That was fantastic. We might pause at that point and ask if anyone does have questions at this stage. We've got a couple of comments in the chat, but I don't think they were actually questions as such. So if anyone did have any questions, feel free to pop them in the chat now, or alternatively, we do have what's called reactions, I think it is, in Zoom. So if you did want to, it's not really raising your hand, but if you wanted to use a reaction and put that on your screen, I think that'll alert us that you want to ask a question. So that's another way if you would like to ask a question now. So we'll leave a little bit of space for people to pose any questions that they might like to. All right, so we've got one from Chen. If we adapt our 10-year plan in October, adopt our 10-year plan in October and the numbers are different, would that be considered as a revised budget?
Do we have to go at that? Because my initial thoughts on that, no, because the adopted budget is the adopted budget. There's nothing that says it prescriptive that the budget numbers need to be the same as the financial plan numbers. In an ideal world, we're asking that they'd be aligned, but remember, we're in year one where we have a different compliance date being 30 June for the budget and for the financial plan is 31 October. I'm wondering, and yet this is a discussion probably we haven't had at this stage, is moving forward in an ideal world, we would do the financial plan as a precursor to 10 years because it's essentially a planning and a strategy document, although there's a lot of legislative requirements, and then adoption of the budget. So my initial sense is that there's nothing mandatory at this stage, and I'm looking down, for confirmation, but REAL requires us to actually align the budget for financial plan. We're just saying for consistency, it would be good to do that, but we understand that that won't necessarily be the case. So I'm merely saying the answer is no, unless, of course, a given council decides we want to take those financial plan numbers, which are stopped at, for example, let's say at the end of October, they've already adopted their budget, they then do their financial plan at the end of October and decide to put those numbers, the financial plan numbers, back into their budget. So obviously, and then use that as their adopted budget. Logically, if they choose to do that, then that could be grounds for triggering a revised budget. But if they don't affect it, but they don't change their budget, their adopted budget's their adopted budget, I wouldn't see there's a reason to complete a revised budget.
Thanks, Malcolm. Look, I certainly tend to agree. I think having adopted your budget, I don't think then adopting your financial plan is necessarily a trigger for a revised budget under the legislation as I understand it, albeit, as you mentioned, we're in transition year, the timing is not ideal and you would potentially have a mismatch between the first 4 years. But again, if you can explain that to your community as to why there is that variation, because there's a timing difference in this first year, I think as long as you're transparent about that, I think that would be, in my mind, I don't think it needs to trigger a revised budget. I'd agree. Thank you for that question, Chen. We have another question from Sharon. Is there scope for FinPro to advocate to the department for budget adoption up to 31 October to align with the financial plan? Excellent question, Sharon. Speaking on behalf of the department, look, I think at this stage, changing the timelines would be pretty tricky, is my initial reaction. I think that they're in the legislation, they're set as they are. FinPro can certainly advocate and we can certainly raise it, but my sense is that it's unlikely that the timeframes are likely to change. Do you have any comments on that one, Malcolm, or thoughts?
Yes, I tend to concur with that. I say that the budget's a budget and it starts for next year, and I'm wondering moving forward, where the financial plan's going to land. But generally, I'll concur with your comments.
Lovely, thank you. And Chen has also said, thanks, Malcolm. We'll try to align, but COVID is making things difficult. Absolutely. definitely. All right, so no further questions in the chat. Oh, hang on, we do have another one. Another two. Maybe my computer's just a bit slow. So quick follow-up question from Nusi. If the borrowing numbers in the 10-year financial plan are different than the budget, shall that trigger revised budget because our borrowing is limited to what is in the budget? Excellent question.
Well, my approach, but it depends. It depends if you're going to borrow on the basis of a financial plan or on the budget. If you're going to borrow on the basis of what's in the budget, no. But if you then have a different borrowing in the financial plan, and that is more than, this is a good point about what triggers a revised budget, of course, and historically, one of the key drivers for me has always been the change of borrowing. So I need to clarify that. So if your financial plan has a higher level of borrowing or requested or proposed higher level of borrowing than the budget, you then adopt the budget. Then you adopt your with the I guess lower amount of borrowings for say 21, 22, for example. You then adopt your financial plan by the end of October that has a higher level of borrowing. The issue would be what you're going to expect to borrow. So if you want to borrow that higher amount, you're right there, that could be grounds for a revised budget. So I think the key thing is for the borrowing is when you adopt your budget by the 30th of June, leaving aside the financial plan, what do you propose to borrow in that, assuming it's for next year? You can borrow up to the level of what's in your budget. That is, you can borrow less or up to the limit. If you want to borrow more, that is a potential, and I'll use the word potential, trigger for a revised budget. So again, it's about the adopted budget in sentence rather than the financial plan.
Great, thank you so much, Malcolm. I might quickly just comment or add to that, confirm in terms of the legislation. So the revised budget, the provisions in the legislation are basically you must prepare and adopt a revised budget before the council can make a variation to the declared rates and charges. So that's one. Or can undertake any borrowings that have not been approved in the budget. That's two. So effectively, that's what we're talking about there. Or can make a change to the budget that the council considers should be the subject of community engagement. So in the new legislation, those are effectively the three triggers in that sense. So yes, effectively, if you're changing the borrowing from your budget, you really would need to do a revised budget. Thank you for that question, Nusi. We have one from Adrian. So what advice can you offer to take into account economic uncertainty, potential change in culture, for example, change in council laws, and therefore change in capital endeavours, and lastly, the likes of COVID? If I could, I might invite Martin Thompson to have a go at responding to that query from Adrian. Are you there, Martin?
Yes, I'm here, and that's I think that's the the million-dollar question in long-term financial plans. The further out we go, the more difficult it is to forecast with any with a degree of certainty, and I think that's why and it's sort of been talked about, I guess, but the financial plans need to, and the long-term financial plan isn't a document in and of itself. So it needs to talk to and be informed by all of council's other strategies and plans and the like. I think there will be, there'll be capital works programs and plans that sit separately to this, which is what should be driving the longer-term financial plan. So as best as it can be rooted in other council documents that set out the direction and expectations is the best you can do. In terms of things like changes in councillors and COVID and the organisation taking different directions, I think it's really important to realise that it is a plan at a point in time, and it's not about trying to foresee what will happen in the future. So you make your best estimates and guesstimates based on what you know at this point in time. And, you know, I will guarantee that year 8, 9 and 10 will look significantly different when they roll around. But I think the key is that we are aligning the long-term financial plan with what's known in terms of other council plans and strategies. And then, you know, where necessary, we make changes on an annual basis. Not sure whether that answers the question, but hopefully it gives some limited guidance.
If I could just add, you know, again, thanks for the question, that part of the reason we do a strategy document and a financial plan is to, as best as possible, address these items. So in terms of economic uncertainty, you're right, it's as we know, the further as we try to predict into the future, the more assumptions that we need to make. So this is why it becomes important to about what is the assumptions that your individual financial plan is going to make about that, about as I said, uncertainty, changing culture and growth rates. We can only do the best we can, as we know, at a given point in time. It's also about putting those into the assumptions, because different councils may take a different position in terms of things such as economic uncertainty, or even things like service levels or even cultural change. It's then, once they have those assumptions, how is your, I guess, funding strategy, financial plan funding strategy going to react to those assumptions, or where you land on an assumption, which is why we have the policy and the strategy. So what's the policy position? Obviously, going back to the item regarding renewal capital, the presupposition of that is you're going to have continual, you know, the rate of your, I guess, erosion, or degradation of your infrastructure, such as roads, is going to continue at a certain pace. You're also making assumptions about service standards, but right, the economic uncertainty is always going to be a challenging one. It's extent on how you can build that in for the reader and for the user about what assumptions you're having to make and how you're dealing with that, and knowing, of course, that we do review this on an annual basis. All right, thanks, Daniel.
That's great. Thank you so much, Malcolm. And thank you, Martin, for those responses. Adrian, hopefully that has helped with your question. We have another question from Mark. Our plan looks like being in deficit over the 10 years. Measures will be taken to reduce spending over the next 12 months going forward, but we intend showing the deficit plan based on what is known. Is this appropriate, or should we assume the cuts being made?
Perhaps, Daniel, I could make a comment on that one. I think
Sure.
The plan needs to be based on what's known at this point in time. And I think, you know, in a way, that's the purpose of the plan, is to highlight what's happening into the future, and then, you know, trigger the changes. But I don't think you should be just assuming cuts will be made to bring it back into balance. You know, we really need to identify those as part of the plan process. So again, you know, it's not unusual for a longer term financial plan to project deficits into the future. And then as actions are taken in the immediate term or in the current term, that over time those future projected deficits come back. So I would think you would, all things being equal, unless you've got clear, tangible cuts that you've agreed to at this point, you would be forecasting the deficit. And, you know, in a way, that's a call to arms in terms of things needing to change in the medium term.
I couldn't agree more. But I mean, if you're not showing that, unless you've got a definitive plan to have those cuts, and there's some, I guess, some policy, strategy, direction around that, or effectively what someone once referred to as a 2 sets of books model. That is, well, you know, we think the way it's going to plan out is deficits, but gee, we don't want to show that because it won't look good. So we'll come up with some numbers that that'll make us look sustainable, when that's not, when you know, it's just a false position. So that's the risk of the 2 sets of books model. We're showing something that, you know, that is not really achievable unless you've got some definite in place. So, you know, I agree with Martin's comments.
Yeah, I think that's a really good point that Malcolm made. I mean, effectively, if you do factor in some cuts that are not identified, then you're really just papering over and potentially hiding, it's a bit of an emotive word, but potentially hiding or concealing what the actual outcomes are going to be. And that's clearly not the intention of the longer term financial plan. That probably goes for the, sorry, Daniel, that probably goes for the following question too, around contingency funding in the long-term financial plan. You know, you've either got the funding or not, and I'm not, you know, like oftentimes we'll think like, if we do get a grant, we might do a certain thing. If we don't get a grant, we won't, and it's difficult. My general sense in that space is that we wouldn't be putting that sort of, you know, potential funding into the long-term financial plan. Now, it is a grey area because, you know, you need to estimate what grants you will receive into the future. That's part of it. But really, you know, it should be done based on what you expect to receive.
And I think, I mean, is this not inconsistent with the way we do 4-year budgeting? You know, we're doing 6 years, 10. Yes, it's going out for another 6 years. So, of course, we're relying a little more on assumptions as the further we go into the future. But that should also be consistent with also how we're doing how currently our 4-year budgets in principle, I guess.
I think that's a good point, Malcolm, as well, given I suppose we've come from a world where it was budget and 3 SRP years, or, you know, a 4-year SRP effectively. So it is something that I suppose as a sector there is some precedent in terms of planning into the future, albeit, as you say, it's for a bit longer than what has been previously the case. Thank you for those responses. So Mark and Michael, thank you for your questions. Hopefully that answers them. Nusi has added another one. In terms of decisions being made as required by the Act, does that refer to high-level decisions such as the policy statements, or going to detailed levels such as whether to increase rates or parking fees or not? Malcolm, perhaps to you on that one?
Yeah, so the sense is this is, my first thoughts are high-level decisions, because again, this is the overarching strategy of the council and their appetite, for example, their appetite for borrowing and where the priorities is. So it's more high-level decisions on policies, but that doesn't mean that if an individual council had an appetite for going to more detail, increase in rates or parking, then I don't see, they could probably put it. I don't think it's designed to do that because it's meant to be a strategy document. But I think if you're in the commentary, there's certainly an opportunity to do that. For example, in the section on the assumptions, we've included some example commentary on each of the major line items. So if there was a proposal to say increase parking fees, there's no reason why in that section on assumptions, but refer to each of those line items, but you couldn't include that as well if you chose to do that. So it does allow for that, but essentially, yes, high level is a starting point, and then optional if you want to include that, be a little more detail.
Fantastic. Thank you, Malcolm. Hopefully that answers your question, Nusi, and thank you for your question. Adrian's left a thanks for Martin and Malcolm, so thank you for that. Kalina, how does this change in reporting obligations for local government match with the reporting obligation of state and federal government bodies? Is it consistent? What are the major differences? Martin, I think you sometimes look at state and federal level as well. Would you be able to have a go at responding to this one?
Look, I think I can, and I think the answer is it doesn't, or it isn't entirely consistent. I think local government, the only entity with a legislative requirement to prepare a 10-year financial plan. Different, so federally, there's a 4-year budget outlook period, and there are from time to time some higher level, longer term forecasts. But at an agency level, at the Commonwealth level, there's no need for them to go out more than in their own budgets, 12 months, and then obviously they get rolled up into the Commonwealth budget as well. I think states similar. So I think you know, the big difference is now that councils are legislatively required to plan out for the 10 years for a financial perspective. And the other thing that's actually really different too is the requirement within the legislation for councils to actually, to bring into the budget process and the financial planning process all of their strategies and plans. So that doesn't exist, as far as I'm aware, that doesn't exist. So, a state government agency can have all sorts of wonderful plans that have no relevance or relationship to their budget and financial forecasts. Whereas in council, that ability to sort of have a strategy and a plan that doesn't sort of tie back to the budget. And I admit, and accept that, there's degrees of, I suppose there's a degree of flexibility in that, but you can't have the disconnect between your council plan and the strategies and that sit under that in the budget. So it's a bit of a rambling answer, but I think that local government has a much more structured and I think demanding financial planning framework in front of it now than other levels of government. Having said that, I think that's appropriate.
Thank you, Martin. Malcolm, did you have any comments on that one?
Only other comment is in terms of other states. We do know that I think in which states, a number of other states already have mandatory financial planning. So I think it's not inconsistent. We ought to have a longer term view, particularly when we're dealing with long term usage assets that require, such as infrastructure assets and how they drive a key part of our service delivery.
Yes, I think off the top of my head, I think New South Wales has had a longer term sort of planning framework for a while. I think New Zealand also, it's a different structure, but I think they also have a longer term sort of planning horizon.
So I'm not sure of the other states.
Yeah. All right, thank you. Hopefully, Kalina, that responds to your question, and thank you for your question. Sam, we are currently engaging with community, formulating council plan which informs the financial plan, adopting a budget at 30 June 2021 while the council plan is being adopted at a later stage. Timing is problematic as we are adopting a resourcing document, being the budget, before the council plan is adopted in October. It's problematic with respect to community perception and planning resourcing around the council plan. Malcolm, any thoughts on that one?
Well, I agree. I'd say the first comment is, I know the legislation indicates that I think the council plan's the end of October, but I know there are councils that are proposing to adopt the council plan by June, so they don't have that problematic timing. That is obviously the resourcing of the budget, and of course also the financial plan, is to actually demonstrate funding of the council plan. So I guess the first thought is, well, if the council plan, if a given council had an appetite to adopt their council plan by the end of June, that would potentially resolve that issue, notwithstanding the fact that it's not a legislative requirement. Other than that, I guess it's again doing the budget on the basis, because essentially a lot of what we do, notwithstanding the fact that we do need to look from a council plan from a long-term funding point of view, a lot of the things we do in the budget, particularly around the day-to-day activity, have already been formulated, and I'm wondering if at year one of the budget for next year is already entrained to a certain extent by the previous council plan anyway. I mean, we know what we have to do in terms of opening the doors on 100 plus services for next year. And service reviews, unless service level decision changes are being made in the meantime, that's going to roll through into July. And essentially we do need a budget to have some management over that process.
Yeah.
Thanks, Malcolm. Sam, did you have anything to add to that?
No, that's good. Thanks, Malcolm. But yeah, you can see why it's problematic, because you're undertaking I suppose, a community engagement process, a deliberative engagement process, which is quite intensive. You're doing that with the council plan. You're trying to inform, so you're bringing in a new council too, so you're informing them just after an election. Then you've got to do deliberative engagement on the council plan. You've got to engage on the rating and plan strategy. So you're doing a hell of a lot of engagement, so to speak. So the timing is problematic, especially in the first year, when trying to get those strategic documents and engage appropriately, because I would have thought that's what the state government's wanting us to do, and giving it a fair crack, and then you're adopting, you know, a budget before, you know, that engagement can happen appropriately, and those strategic documents can be in place to inform your resource plan. So it is tricky this year, and it's tricky in the first year, especially when you've got a new council. So yeah, you know, we can work around it, and I agree with your sentiments that really your first year of your budget's locked in, so to speak. But just, it's not a really good look for the community when you're engaging with them and you're putting out, you know, a resourcing document before you've, you know, finished your engagement, so to speak, or adopted those strategic documents.
I think they're all valid comments. Not also that the whole community engagement is we're at the start of a journey on this.
Yeah.
In terms of what counts capacity, and rather than appetite, but maybe capacity in year 1 to do, it's going to be different to year 2 and 3. And we're all going through a learning phase. Remember, we're coming out of statutory 223, which is essentially at the low end of community engagement. So we're not going to get, I wouldn't thought we're going to get burned too much if, but councils don't have a completely robust community engagement process in year 1. Yes, you can have a fair crack at it, but there's a lot going on in terms of, I guess, capacity, and to a certain extent, we're all on the learning curve.
Yeah. No, that's good. Thanks, Malcolm.
Thanks, Malcolm, and thank you so much for the question, Sam. Certainly appreciate that it's a challenging first year and the timing is not ideal. Next question is from Dennis. State forward estimates, ILTFF, is for a 10-year period, similar the local government. Whilst deficits may appear in the future, this can be changed through adjustment in policies or financial triggered events such as COVID-19. Section 95 of the Local Government Act requires the preparation of a revised budget if the proposed changes fall into one or more of the following categories: variation to declared rates and charges, borrowings that are not already approved in the budget, or council considers the proposed change should otherwise be the subject of community engagement. This will likely be in council community engagement policy once it has been adopted. So thank you, Dennis. I think that's more a comment than a question. My comments in response to previous questions. Lovely. Thank you, Dennis. Appreciate those comments. I can't see any more comments in the chat at the moment. Does anyone else want to contribute, ask a question at this point in time? I'm not seeing any reactions or additional chat comments at this stage. Look, what I might do, I will jump back into sharing my screen. All right, so just a quick comment on upcoming events. So thank you to Malcolm for presenting today, and also obviously for all your hard work and dedication in leading the development of the financial plan template and the better practice guidance this year. And also a big thank you to the sub-working group who has supported him in this work. Really appreciate all your hard work, and conscious that it's on top of your day jobs. So thank you so much for that work and that dedication. We do have a couple of upcoming events. Let me see if I can work the technology. Okay, so there's a fraud awareness session on Thursday next week. And there's also a webinar covering the revenue and rating plan on Friday the 19th of March, so next week on Friday. So if you haven't registered for either of those and you are interested in attending, I encourage you to head to the FinPro website where you can register to attend and come along to those events. We have been through some questions. So unless anyone's got further questions, please pop them in the chat if you do. If not, if you have any questions subsequent to today's session, these are our contact details. So you can contact either myself, Martin, or Malcolm. There will be a recording of today's webinar that will be made available shortly by FinPro. And obviously don't forget the upcoming events next week. A big thank you to FinPro and Gabrielle in particular for managing the arrangements for today's session, and a big thank you to all the Financial Plan Working Group members for their efforts in putting these publications together. It is certainly much appreciated. And of course, thank you to everyone here for attending today's session, and good luck with preparing your financial plan for this year. Enjoy the rest of your day, and if we have no further questions, I will do a quick final check. All right, we do have another question from Anita. Has anyone thought about what they are doing for future projections of human resources? Excellent question. I was expecting to get something like this today. Malcolm, do you have any thoughts about how to project your future projections for human resources?
Yes, when I saw the 10-year view of FTE in dollars, I thought, well, this will be interesting on how we actually do that. So, right, I guess the best we can do is base it on how can we have a 10-year view of employee costs, essentially the alignment between obviously human resources and employee costs. So there need to be some correlation between the two. For example, if you're making some assumptions around an EB, for example, increase every year on your employee costs that's in line with CPI, for example, or whatever your growth is, or if you're putting in those numbers, those 10-year numbers of, say, a growth of 1 or 2% based on expected, I guess, service demands, then it would be logical to have the same correlation escalation in the in your work plan. Now, we put the detail, but I guess that's probably rather than the details, a higher level answer. So you'd expect some correlation. Obviously, well, I mean, the dollars will need to align back to the employee cost, but you expect there'll be some alignment in terms of rate of increase or rate of change in the FTE full-time equivalent staff. Thanks, Daniel.
Thanks, Malcolm. Hopefully that answers your question, Anita. There's another one in there from Chen. Is there any plan on developing a module workforce plan and a module asset management plan? I can potentially respond to that one. I think the workforce plan, there is some work underway. I believe if you visit the Engage Vic website, you can find out a little bit more about what's happening in that space. But I think we're at the relatively close to the start of that journey. But visit Engage Vic, there's a bit more information there. In terms of asset management, I think we're talking about the asset plan, I take it here, which is a requirement, but it doesn't come into play until next year. It's not required to be finalised until next year. So the answer is yes, we will be doing some work on the asset plan and providing some sort of guidance in that space. But at this point in time, we're sort of more focused on the immediate requirements, and then now turning our attention towards the asset plan space. Thank you, Chen. So hopefully that answers those questions. I did see Hannah has her hand raised. So Hannah, did you want to say something?
Yeah, I just wanted to provide some information on what Mitchell's doing in relation to the human resource projections. So we develop a 10-year financial plan, an LTFP, and within that we actually populate what we expect when we expect new positions to come on board over the 10 years, down to the actual specific positions themselves, so that when you do your statement of human resources, you know which director it's going to sit in, if it's going to be full-time or part-time, etc. The other thing that we're going to do, which isn't in line with the model budget or the model financial report, financial plan, is we don't want to predict what those new positions will be in terms of gender. So we're actually going to put in an additional line within our table to represent vacant positions / new positions. So where we've got a current position that's vacant, or we've got a new position coming on board over the financial plan, we'll actually specify that so that we're not actually going to assume what what gender we're going to employ in any given particular position. So that's what we're doing in that space. Thank you.
Fantastic. Thanks, Hannah. Thanks for sharing those comments. So thanks from Anita. Does anyone else have any final questions? I don't have good good sight on my screen in terms of if anyone has hands up or if they have any reactions going on and they want to say something, but I can't see anything else at the moment. Malcolm or Martin, can you see any others? No? All right, look, we might finish up there, folks. Thank you so much for attending today. As I said before, there'll be a recording available of the session, which FinPro will circulate the details of shortly. And thank you so much to Malcolm and Martin for attending and presenting today and responding to the questions. Hopefully that's been helpful to the audience. Thank you so much for coming along. Have a great weekend, and we will see you all soon. All right. Thanks, folks. Goodbye.